Good morning. Thank you all for being with us today. I call this hearing to order. 6 years ago tomorrow, the Patient Protection and Affordable Care Act of 2010, otherwise known as Obamacare, was enacted. It imposed a host of new obligations and taxes on insurance companies, individuals, and employers, including small businesses. These new burdens included an individual mandate, which requires that most individuals have health insurance, and an employer mandate, requiring that most employers provide health insurance for their employees. In both cases, non-compliance results in significant penalties. Fortunately, employers with fewer than 50 employees were exempted from the employer mandate. However, their employees are still subject to the individual mandate and must have insurance. And as we all know, many businesses with more than 50 employees can hardly be termed large, yet those businesses are ineligible for the exemption. In order to provide an incentive for the smallest of the small, those employers with fewer than 25 employees, to provide employee health insurance, a small business health insurance tax credit was included to offset the cost to the employer. Like so many other parts of Obamacare, this was another case of overpromise and underdeliver. Multiple assessments, both during initial implementation and now today, years down the road, have made it abundantly clear. The credit scheme is so cumbersome and poorly designed that it is largely ineffective. As the credit's useful life comes to a close, today's hearing will reevaluate its efficacy from several different perspectives. I'd like to thank our witnesses for coming today, and I look forward to your testimony. I now yield to Ranking Member Chu for her opening remarks.
Thank you, Mr. Chair. Before the Affordable Care Act was enacted, the rising cost of health care was one of the biggest worries for small companies and their employees. The ACA introduced many substantial changes to the insurance market with the hopes of making quality health care affordable for small employers. One way in which the ACA helped make health insurance more accessible to small companies was through the Small Business Health Care Tax Credit. The ACA provided $40 billion in tax assistance through the Small Business Health Care Tax Credit and was made available immediately upon its enactment. This credit aimed to make health care coverage attainable for the smallest of businesses. Research has shown that the fewer employees a company has, the less likely it is that the business offers health insurance. For example, businesses with between 3 and 9 employees only offer rates of 46%. This is a stark contrast from their larger counterparts with more than 50 employees that offer rates of over 95%. The tax credit was designed for businesses that are small. However, while the credit was originally estimated to support between 1.4 million to 4 million small employers, the use of the credit by small employers was much lower than projected. While final data on the use of the credit is still being collected and analyzed, the most current information shows its use to be low among eligible businesses. Although there are some conflicting reports on the actual use of credit, the numbers are disappointing. For instance, the final IRS data for 2010 indicates 335,600 claims were made, but another report by the GAO found that only 170,300 small employers claimed the credit. But both show the same thing: few small businesses taking advantage of a critical tax credit that would benefit them greatly. Today's hearing serves as a way for us to examine the tax credit and learn what challenges faced small businesses attempting to use the credit. Most recently, the GAO concluded that nearly 168,000 employers claimed the credit in 2012. Despite few employers using the credit, nearly 1 million employees obtained employer-sponsored health coverage through businesses claiming the credit. It's clear that the low adoption rates by small businesses were caused by numerous factors. Among the single greatest factor was a lack of awareness surrounding how the credit actually worked. The complexity of the calculations and requirements to be met were daunting for small employers with limited time and resources. Another challenge for small firms was meeting the stringent eligibility rules to be fully qualified for the credit. Strict salary requirements and employee counts had to be met. This added to the complexity and credit amount available. A final challenge was the delay in the Small Business Health Options Program, or SHOP exchanges. Despite these problems, small employers and the healthcare industry in general are experiencing some benefits. More workers are obtaining health coverage and are now able to start their own businesses or change jobs without fear of losing their insurance. Additionally, we've seen per capita healthcare spending grow at its lowest rate on record for any 3-year period, and the uninsured rate drop. And premium rates are decreasing in some states and stabilizing in others. In fact, the average premium for employer-based family coverage grew a relatively modest 4.2% in 2015. This continues the trend of slow growth, with the last 4 years accounting for the lowest growth rate since 1999. These lower rates are in part due to more competition in the market. This hearing will show just how critical the tax credit was to small firms wishing to offer health coverage and highlight areas where improvements could have been made. We will hear today why expanding and improving and strengthening the credit should have been done while it mattered most to our small employers. I would like to welcome all the witnesses and thank them for being here today. Thank you, and I yield back.
Thank you. If committee members have an opening statement prepared, I ask that they be submitted for the record. I'd like to take a moment to explain the timing lights for each of our witnesses. You each have 5 minutes to deliver your testimony. The light will start out as green. When you have 1 minute remaining, the light will turn yellow. Finally, at the end of your 5 minutes, it will turn red. I ask that you try to adhere to this time limit. Our first witness is James McTeague, Director of Strategic Issues at the GAO, overseeing their audits of the IRS on a wide range of issues relating to tax administration and policy. He has 25 years of GAO audit experience across a variety of agencies and programs. Mr. McTeague holds a bachelor's degree in economics from Brown University and a master's degree in public and private management from the Yale School of Management. I appreciate you being with us today, Mr. McTeague, and you may begin.
Thank you, Mr. Chairman, Ranking Member Chu, Congressman Hanna. I'm pleased to be here today to discuss our work on small employers' use of the health insurance tax credit. The tax credit was established as part of the Patient Protection and Affordable Care Act to help small employers provide health insurance for their employees. Our findings indicate that use of the credit has continued to be lower than expected, limiting the effect of the credit on expanding health insurance coverage through small employers. As we discussed in our 2012 report, small, low-wage employers historically have not offered insurance for 3 reasons. First, health insurance is expensive and drives up the cost of labor. Second, lower-wage employees generally prefer cash over benefits. And third, insurers of small employers face high costs and are less able to pool risk across many employees. As a result, plans for small employers are likely to have higher premiums and fewer benefits. Government estimates indicate that about 86% of employers who may have been eligible for the full credit and 76% who may have been eligible for a partial credit did not offer their employees health insurance in 2013. While government and industry estimates place the number of eligible employers somewhere between 1.4 and 4 million, only about 181,000 employers claimed the credit in 2014. This is down slightly from 2010, as shown in Figure 1 of my statement. In our 2012 study, we identified 4 key reasons why small employers did not claim the credit based on interviews with groups representing small employers, tax preparers, insurance brokers, as well as discussion groups with small employers themselves. First, the amount of the credit is too small to influence employers to offer or maintain insurance. This is because few small employers actually qualify for the maximum credit, since the credit is phased out to 0 as the number of employees reach 25 full-time equivalents and average wages approach $52,000. And the credit is limited to the average premium in the small group market in the state. In our report, we found that only about 17% of employers who claimed the credit in 2010 were eligible for the full amount. Usually, employers could not meet the average wage requirement. In fact, 68% did not qualify based on wages, even though they met the FTE requirement. Second, the credit can only be claimed for 2 consecutive years beginning in 2013. We found that employers may be reluctant to provide a benefit that they may have to take away later when the credit is no longer available and they are faced with higher costs for premiums. Third, GAO also found that the cost and complexity involved in claiming the credit was significant, deterring small employers from claiming it. For example, a major complaint that we heard had to do with the effort required to gather information on the number of hours worked for each employee in order to calculate full-time equivalents and the associated average annual wages. Tax preparers told us it could take 2 to 8 hours to gather the necessary information and that they spent 3 to 5 hours calculating the credit. Fourth, many small employers have also reported that they were unaware of the credit. In response, IRS developed a communication strategy that includes written materials, a website, and outreach to interest groups. However, the effectiveness of this outreach is unknown. Our 2012 report also discussed ways that the design of the credit could be altered to spur greater use of the credit. Options include increasing the amount of the full credit, the partial credit, or eliminating the state average premium cap. Other options would expand eligibility by increasing the FTE and wage limits for employers. And some options involve simplifying the credit calculation by using the number of employees and wage information already reported on the employer's tax return, or offering a flat credit amount per employee rather than a percentage. In recent years, Congress and the administration have proposed a number of changes to the credit as well. These include expanding the size of eligible employers, altering the phase-out rules, and allowing the credit to be claimed in more than 2 consecutive years. In conclusion, expanding eligibility or increasing the amount of the credit may spur more small employers to claim the credit. However, these changes would increase the cost to the federal government. Mr. Chairman, Ranking Member Chu, and members of the subcommittee, this concludes my prepared remarks, and I'd be happy to take any questions.
Thank you, Mr. McTeague. I appreciate the testimony. We'll have questions here shortly. Next up, I'm now pleased to welcome Harold Jackson, who is Executive Chairman of Buffalo Supply Incorporated, located in Lafayette, Colorado, just to my west from Kansas. Buffalo Supply is a family-owned business that has been devoted to providing high-tech medical supplies and equipment to the federal government since its inception in 1983. Mr. Jackson joined the company in 1990. He's also an active member of the U.S. Chamber of Commerce, where he serves on the Small Business Council and the Government Procurement Subcouncil. He also is a longtime member of the Coalition for Government Procurement. I appreciate you being with us today, Mr. Jackson. You may begin.
Thank you, Chairman and Ranking Member Chu, distinguished members of the committee. My name is Harold Jackson. I'm the Executive Chairman of Buffalo Supply, a 20-employee small business located in Lafayette, Colorado. I'm honored to speak to you today on behalf of the United States Chamber of Commerce. Since 1983, our family-owned business has been devoted to providing high-tech medical equipment and supplies to federal-funded facilities. We provide exceptional customer service, a deep level of expertise to our supply partners, and a high-quality workplace for our employees. We have 16 full-time and 4 part-time employees. I understand most tax credits are designed to incent or change behavior. Let me be clear, we've always provided health insurance for our employees, but premiums have increased dramatically year after year, and we may not be able to continue to provide health insurance in the future. Because BSI is ineligible, the tax credit does not help me provide affordable coverage for my employees now, nor will it encourage me to continue so in the future. We may be forced to stop providing health insurance due to the escalating cost. Over the years, we've changed carriers almost annually and explored different plan designs, moving from PPO to high deductible plans. And in the beginning, we covered the associated HSA contributions to cover the high deductible, but we had to reduce that from 100% coverage for our employees to 50% of the deductible, and now down to 0. We do pay 100% of the premiums for our employees and their dependents, but subject to higher family deductibles from $3,000 up to $5,000 and higher maximum out-of-pocket expenses up from $4,000 to $6,800. So we're paying more in premiums, and our employees are paying more when they require medical services. When Connect for Health Colorado opened its shop in 2015, I went online and tried to enroll. Unfortunately, the amount of information required in the online application process was incredible. Much of the information I didn't have access to, such as dependents and spouses' social security numbers, dates of birth, tobacco use. After 3 days of gathering this information and another 10 hours of entering it into the system, I could not review the plan options or see quotes. So I contacted the shop at their 800 number, and I was told that we don't provide quotes to small businesses, that you would need to go through your insurance broker. Interestingly enough, when I called the insurance broker, he said, well, I'll be happy to provide you with a quote, but it won't be through shop. They're way too much hassle for us to deal with. So the people they referred me to didn't even want to use them. Based on my experience, the shop requirement is an onerous hurdle in and of itself. The biggest hurdle, though, is the annual earnings cap of $50,000. I'm certainly not a tax expert, but it would appear to me that we could improve it by first removing the requirement that small businesses go through SHOP. Second, increase average earnings cap. Third, make the credit available for more than 2 consecutive years. The bottom line is the tax credit needs to be easier for businesses to assess, and the hoops need to be simplified. It seems like a big part of the problem is the rules for the tax credit are so confusing that small businesses cannot assess the benefit without hiring outside counsel. Ultimately, any changes should not only increase the tax benefit to help small businesses, but must be simple and easily understood. Thank you for this opportunity to testify, and I'd be happy to answer any questions.
Thank you, Mr. Jackson. I appreciate your testimony and disappointed in your experience with SHOP, and hopefully there'll be some questions on that later. Up next, I'm pleased to welcome to the subcommittee Holly Wade, who's the Director of Research and Policy Analysis at the NFIB. In that role, Ms. Wade oversees the Foundation's publications, including the monthly Small Business Economic Trend Survey and Small Business Problems and Priorities. She also provides in-depth analysis on public policy issues that impact our small businesses. She's a member of the National Association of Business Economics and the Department of Commerce's Industry Trade Advisory Committee on Small and Minority Business. Ms. Wade is a graduate of the University of Washington with a degree in political science and sociology, and she has a master's of public policy from the University of Denver. And I appreciate you being with us today, Ms. Wade. You may begin.
Thank you. Good morning, Chairman Huelskamp, Ranking Member Chu, and members of the subcommittee. Thank you for the opportunity to testify today. I am pleased to be here on behalf of the National Federation of Independent Business as the committee discusses the small business health insurance tax credit. Small business owners rank the cost of health insurance as their most severe problem in operating their business out of 75 potential issues, with 56% of small business owners finding it a critical problem. The high cost of health insurance is the main reason owners do not offer employer-sponsored health insurance and the main reason owners discontinue providing the benefit. And for those offering, many owners annually confront the arduous task of adjusting profit expectations, insurance plans, cost savings, and other cost sharing and other mechanisms to help absorb the often erratic changes in total premium costs. The rising cost of health insurance has forced many small employers to rethink the viability of offering health insurance to their employees, especially during and in the wake of the Great Recession. Since 2008, the offer rates for small businesses with fewer than 50 employees has dropped precipitously. Small business owners are far more hesitant to commit themselves to offering a long-term, high-cost benefit. The offer rates for this group have fallen over 10 percentage points, from 43% offering in 2008 to 32% in 2014. The Small Business Health Insurance Tax Credit was a targeted approach to help curb health insurance costs for offering small employers and was intended to provide an incentive for those that do not to start offering. However, the tax credit was largely ineffective on both fronts, as its design is exceedingly restrictive, complicated, and only offers limited and temporary relief to a larger small business cost problem. To date, the tax credit has generally served as a windfall for the few small business owners who qualify and take the time or pay an accountant to file for it. The ineffectiveness of the tax credit is largely due to 4 factors. The first and most limiting factor in claiming the tax credit is that eligibility was targeted to and most beneficial for those small businesses least likely to offer health insurance. Health insurance operates very significantly by employee size of firm and average wages. Those businesses with lower than average wages are more likely to compensate employees in cash and not benefits. Health insurance costs would significantly crowd out employees' take-home pay. Smaller small businesses are also less likely to offer health insurance, and those factors vary from high administrative burdens, low take-up rates, and higher than average premium costs. Second, the tax credit is exceedingly complicated to verify eligibility and claim the credit. The IRS estimates that record-keeping requirements to claim the credit average just under 11 hours for most filers. The education component is estimated to take about an hour and a half. And finally, the time spent preparing and filing is estimated to take an average of 2 hours and 46 minutes. While most small employers use a tax preparer for their business, the costs associated with claiming the tax credit will deter many from going through the process in the first place. Since 2010, NFIB has received numerous complaints from small business owners regarding the complexity of the tax credit. Some owners called to say that even their tax preparer told them the credit was not worth the extra costs associated with determining eligibility and filing the paperwork. Third, the tax credit is temporary. At most, the credit was available to small business owners for 6 years if they started claiming the credit in 2010. Currently, small business owners can claim the credit for 2 years. Health insurance is a long-term benefit offered by employers to retain and recruit employees. Owners generally start offering the benefit when profits allow for the added costs. Profitability was an important factor in offering health insurance for 63% of newly offering firms. The tax credit is little relief in the long-term cost challenges small business owners face in offering health insurance. And fourth, as of July 1st, 2014, the small business tax credit is only available to qualifying businesses through the Small Business Health Options Program marketplaces. Most small employers purchase health insurance through an insurance agent and therefore rely on the agent for suggesting health insurance options available to them. Only 13% of offering small businesses visited their shop exchange, and of those offering and shopped, less than 1% purchased through the shop marketplace. Among non-offering firms, 17% of small employers shopped for coverage through the shop exchange. The vast majority of non-offering firms did not select a plan through shop because the plans were too expensive. The small business health insurance tax credit was too narrowly designed to be an effective cost-saving tool for small employers. The tax credit has now been available to qualifying small business owners, small employers for 5 years, and still very few businesses have benefited. But more importantly, health insurance costs continue to increase, and small business owners continue to struggle with their ability to afford offering the benefit. I appreciate this opportunity to present NFIB's views and data on the effects of the small business health insurance tax credit, and I look forward to answering any questions you may have.
Thank you, Ms. Wade. I appreciate the testimony. I look forward to questions and answers on that. I'm now pleased to yield to the ranking member of this subcommittee so that she may introduce our final witness, Mr. Rico.
It is my pleasure to introduce Mr. Michael Rico, Quality Manager for AEEC, a minority and woman-owned small business. AEEC provides IT, environmental, and engineering services to federal and commercial customers. Mr. Rico has been with AEEC for over 2 years and oversees quality assurance and compliance for every department and federal contract at the company. Additionally, Mr. Rico is a facilitator and member of AEC's Management Board. He holds a Master's of Arts from Syracuse University and a Bachelor of Arts from the University of Arizona. As the manager of a woman-owned business, he's testifying today on behalf of the U.S. Women's Chamber of Commerce, which represents 500,000 members, 3/4 of whom are small business owners and federal contractors. Welcome, Mr. Rico.
Thank the ranking member for that introduction. Mr. Rico, you may begin.
Good morning, Chairman Hulskamp, Ranking Member Chu, and other subcommittee members. Thank you for this opportunity to provide testimony before the subcommittee on economic growth, tax, and capital access. My name is Michael Rico. I'm the quality manager for AEEC, a woman and minority-owned small business located here in Western Virginia. Our president, Sangeeta Patel, wishes she could be here in person, but she had a conflict. AEC is an award-winning professional services organization offering top-quality technology, environmental, and engineering solutions to U.S. federal government and Fortune 50 customers since 1995. We support our customers' requirements and offer a range of customized solutions with the highest degree of honesty, integrity, and service excellence. We offer solutions that are efficient, appropriate, and worthy of investment. Our company is also a member of the U.S. Women's Chamber of Commerce. While I would like to testify today that my company has been able to benefit from the small business healthcare tax credit, that is unfortunately not the case because we are ineligible for the following reasons. First, we are ineligible because we have more than 25 employees. As this subcommittee is well aware, there are many differing definitions of what a small business is, ranging from 50 to 100 to sometimes even 500 employees. The size standards for companies to use this healthcare tax credit is on the woefully low side and should be increased so that many more legitimate small businesses can take advantage of this tax credit. Second, we are an IT company, and as such, our employees tend to earn higher salaries than many other employees working in small businesses nationwide. Therefore, we do not qualify because our workers, on average, make more than $50,000, which is the current cap as stated in the implementation language governing this credit. We question the fairness of this cap because, in essence, it punishes our company for paying our employers a higher wage. This limitation, in our view, should be removed from the eligibility requirements of this tax credit. Why do I say these changes should be made? Because AEC would very much like to use this credit. Receiving a tax credit for up to 50% of our healthcare costs would certainly help us reduce our own costs. We all know, and as pointed out in the GAO report, plans for small employers are likely to have higher premiums, less coverage, and higher costs than plans for large employers. Yet we, as a small business, want to do the right thing and provide healthcare coverage for our hardworking employees. AEC has long provided healthcare coverage to all of our employees, and we go far beyond the minimum coverage now required by the Affordable Care Act. Our package would fall in the platinum or high gold range, so expanding the tax credit would go a long way to help us pay for premium increases and cover the additional compliance and reporting requirements that have come with the ACA. Here's something else to consider. The expectations that would-be employees have for benefits coverage get higher with salary levels. For example, a cashier at a fast food restaurant might be thrilled getting any healthcare coverage, but a senior data architect expects to have a platinum healthcare package. This makes small businesses like ours among the most in need for a tax credit. Finally, I would like to stress that although the ACA very much help very small businesses with subsidies, and large businesses benefit from large pools that keep their costs down, it is the small businesses in the middle, particularly those between 50 and 100 employees, that would benefit the most from this healthcare tax credit. Therefore, I would ask this subcommittee to consider making changes to this credit so that more small businesses that are so critical to our nation's economy can be better able financially to pay for these healthcare costs. Two changes I have already mentioned: increasing the eligibility threshold for the number of employees that work at a small business, and removing the wage barrier that excludes so many businesses from eligibility. Two other reforms that we would recommend are increasing the credit so that it is more cost-effective for small businesses to actually use it, and to make it last longer than 2 consecutive years. Again, thank you for this opportunity to address this subcommittee. AEC is dedicated to providing our employees with the best healthcare coverage possible, yet the fact remains that we are still a small business, and these costs are quite high. We would urge this subcommittee to put forth language that would make this important healthcare tax credit more accessible to the small businesses in our nation that I would like to point out, on average, account for over 60% of all net new jobs created in this country. I would be happy to answer any of your questions. Thank you.
Thank you, Mr. Rico, and other witnesses for your input. And we'll go ahead and open it up for questions. And we have a few subcommittee members here, but we'll start on that. First, Mr. McTeague, Mr. Jackson, I appreciate testimony. Mr. McTeague, we've been given the number of employers that are participating. What's the number of actual employees that are receiving some additional coverage because of this credit at that level? Do you have that data?
Yes, the actual number of employees covered, it fluctuates year to year, but on average, I'd say it's around 800,000. So a larger number than the actual employers.
Certainly. And in terms of that, the estimates that you presented were on the employer level, and of course the estimates from the CBO were significantly higher than they've come in. The number of employees, did they actually identify how many they thought would be covered, additional coverage because of this at the employee level, and did they meet those estimates with the implementation? Do you have those figures?
I don't have the figures. I can provide them for the record, but I do know that the overall cost, the take-up rate of the credit was much lower than originally estimated by CBO and the JCT, and it continues to be lower than their revised estimates.
Yeah, I appreciate that. Mr. Jackson, I mean, you've given some insight, particularly your personal experience with your company and the limits and of working through the shop exchange. Can you describe that a little bit more? With you go to the shop, they ask for information you didn't have, and then they refuse to provide an estimate. I'm just shocked that they would tell you, well, we don't provide estimates for small businesses. I assume in the state of Colorado, I see it's a state-run exchange, and so was small business not a focus at all? I mean, I presume their exchange is one exchange, I guess, for small business and the individual market. Can you describe that a little bit more for the subcommittee, your experience with the shop in your state?
Well, my personal opinion is that it's more focused on the individual marketplace than it is the small business marketplace. And it would have been helpful if they just upfront said, small businesses, go to your broker to get a quote, but they allow you or keep asking you all this information about your employees, and they don't really tell you that ever. When you get to the end, I had to call them and say, well, I've entered all this data. Now where do I find the options, the policy options and the quotes? And that's when they said, well, we don't really provide small businesses with quotes. So it was a very frustrating process. I would throw in that we've done everything I think reasonably and prudent possible to try to minimize our premiums, yet over the last 5 years they've still gone up over 25%, and we can't, and even to do that, we are not in a small business program. I had to join a professional employer organization to get into another company's large insurance pool to keep our premiums as low as they were. The last small business quote I got, our premium increases were going to be something in the neighborhood of 70% 1 year to the next year.
Ms. Wade, the experience of Mr. Jackson, is that what you're seeing across other states, even if it was a state-level exchange or a federally facilitated exchange, partnership exchange? Is this similar, the story you're hearing across the various states?
It's a very common story that we're hearing from our members. And it's not, unfortunately, state-specific. It's not size-specific. They are all having a lot of frustrating circumstances in accessing SHOP and looking to find more affordable health insurance for their employees. And if they aren't offering insurance, finding a plan that would work for their business and for their employees. So yes, we're hearing many stories that are very similar to Mr. Jackson, and they're still coming in, unfortunately.
And a follow-up question for any of the witnesses who can answer this. The information that Mr. Jackson provided to the shop, extensively hours and hours of information that chose to go elsewhere, really had no choice to stay in the shop. What happens to that information?
That's an interesting question that I don't know the answer to, because some of my people were, well, I will say semi-reluctant to provide me with the information, but I explained if they wanted health coverage, they really didn't have a choice but to provide me with that information. I have no idea what happens to it, but I am concerned.
Yeah, so You asked for some information. They were reluctant to provide it. You turned it over to the shop, and then you didn't even sign up through that. That's something I'd like to follow up on for folks that might be able to answer that. So I appreciate that, Mr. Jackson. And I see I'm out of time. I'll now recognize our ranking member for her 5 minutes of questions.
Mr. Rico, the small business healthcare tax credit was meant to incentivize small employers into offering health insurance. How do you feel the IRS worked with the business community to provide information about the credit, and was that outreach adequate?
In our situation, it was adequate because it was very clear what the size standards were: 25 or fewer employees, average of 50,000 or less. If you couldn't hit those, there was no sense in looking further. So for us and many other small businesses in our situation, we could tell right away we weren't eligible. Now, that may not be the case for smaller businesses that would have. However, there was information out there, and they could have reached out.
Well, talking about size standards, the tax code contains many different definitions of a small business, and what a small business is depending on what section of the code we're discussing. But this lack of uniformity certainly was highlighted by the ACA in its definition of a small business. This definition shaped which businesses were eligible for the tax incentives in offering health care. Mr. Rico, what do you think would be a better size standards with regard to the ACA?
Well, it certainly makes sense to have size standards because small businesses are in much greater need for a tax credit than larger companies. However, I think it would have made a lot more sense to base it off of NAICS codes. The government already sets NAICS codes for every industry. If you want to be a federal contractor, you have to fall into those. Every business knows what their NAICS codes are. It wouldn't take any type of change to use that as the basis instead of this arbitrary 25 employee $50,000 cap.
Mr. McTeague, what do you think about this size standards? What would you have found to be a better size standard with regard to participation?
We didn't look at what would necessarily be a better size standard. Obviously, there are trade-offs associated with how you target a benefit, whether through the tax code or a spending program. So expanding eligibility, expanding, both on the FTE and average wage would have trade-offs in terms of increasing the cost of the program or the tax credit to the federal government. So those options have to be weighed. Complexity, as we've heard from all of the witnesses, is a major issue. Reducing complexity can be achieved at relatively less cost, so that might be an option to pursue.
Let me ask about the different numbers too. The analyses of the small business healthcare tax credit by the Treasury Inspector General of Tax Administration, the IRS, and the GAO all concluded drastically different results for the use of this incentive. So, Mr. Mateague, can you walk me through why the GAO's numbers are much lower than those of the Treasury Inspector General of Tax Administration and the IRS for the 2010 claims?
Yes, for today's statement, for today's report, we reached out to the IRS and obtained the most recent data available. Those data do differ from what we originally reported in 2012 for the tax year 2010. Basically, it's an issue of more returns having come in since we previously reported. Overall, the numbers are relatively low compared to the number of potentially eligible small employers. So I haven't looked at the TIGTA numbers specifically. We can look at those and get back to you for the record. But again, I think you mentioned something in the order of 300,000 versus 181,000 that we reported today. Not a big difference compared to potentially eligible in the millions.
Do you plan to perform a final analysis using these numbers?
Not at this time. We'd be happy to do so at the committee's request.
Yeah, I certainly would be interested in that. Despite the low adoption rate, nearly 1 million employees whose employers claim the credit are benefiting from the ACA, but this is an increase from only 770,000 workers in 2010 and through fewer employers. Has the GAO studied whether these numbers are due to small employers hiring more employees or simply different businesses entirely who are claiming the credit?
We haven't studied that issue. There are a number of factors that come into play. It could be the size of the company, companies coming in and out of claiming the credit. As you're aware, the credit originally was available for up to 6 years when it was originally established. Beginning in 2013, it was only available for 2 years. Also, we mentioned one of the factors that we found was the lack of awareness. Maybe part of the issue, companies becoming more aware of it and signing up for it.
Thank you. I yield back.
Next, I'd like to recognize Richard Hanna, who actually has personal experience in this arena. I look forward to your 5 minutes of questions.
Thank you, Chairman. Government's famous for unintended consequences, but there's something insidious about this. The time, the incentive to raise pays, the complexity, the fact that you went from 16% to 32% of companies that aren't doing this or aren't supplying it. Mr. McTeague, Ms. Wade, is it possible that in this particular case, this law is doing exactly what it was intended to do, and that is incentivize people to have insurance for a short period of time, but ultimately create a marketplace where the real goal is to force everybody to provide insurance without really giving them any benefit? Maybe that sounds like a strange question, but it seems like there's nothing about this that's workable or working. If you really wanted people to get more insurance, this is not what you would design. None of us here would. So what do you think of that? I mean, it's my inference.
I think in terms of the Patient Protection and Affordable Care Act, as you know, Congressman, in the United States, many people, the majority of workers receive their health insurance through their employers. I think it's something in the range of 55% of all employees receiving through their employer or the spouse's employer, something of that nature. Whether or not this was the best way or the most efficient way, the most equitable way to either incentivize small employers to provide health insurance or have all individuals have some sort of health insurance coverage is, there are trade-offs in terms of different ways of requiring that, delivering the service. I mentioned, would a spending program be more efficient? A direct subsidy as opposed to a tax credit, or it's the small employer health tax credit is a small piece of a larger strategy to provide health insurance for all individuals.
So, I mean, the bottom line is this isn't working, and people aren't incentivized to use it, and it's not producing the outcome it was intended. I mean, it's nice that more people have insurance, but on the margin, you'd have to say it's a very small number compared to the number that it might be able to affect. If it were simpler, longer, maybe raise the number, I don't know. So this ought to be something you can look back and either decide to make it go away or fix it and make it cleaner. Ms. Wade? Anybody?
No, I absolutely agree. The tax credit is far too temporary and far too limiting to the people that are able to.
The temporary part of it's what makes me think it's a little insidious, because clearly you're not going backwards. You don't give somebody a pay raise effectively through insurance and then yank it back in 2 years.
Sure.
Any fool can project the cost of that out for however long you may think you have your average employee and say, I'm not doing that, because in 10 years it's going to cost me 10 times or 5 times more. So I think the whole rule is suspect.
Absolutely. For small employers, offering health insurance is a very costly long-term benefit that generally takes some time when they start their business to offer that. It's based on profitability, their certainty about where sales are projected to go in the near future. So offering the benefit is a serious consideration for small
It
business
looks like
owners
the
and for
the
the
government's
long
trying to
term.
lock people into this without giving them an exit strategy or an incentive that actually works in the real world. And, what do you think, Mr. McTeague?
I would just add that, again, it comes down to a trade-off between the cost to the government and, cost sharing overall. Certainly, if we expanded the credit or made it permanent and offered it to more people, a lot more people would benefit. However, it would cost the government a lot more.
You have to look at the goal, though. I mean, if the goal is somewhere in between, right? I mean,
Exactly.
I would wager that the government looked at this and said, this is really expensive. And how can we limit it? So you do 2 years and a few other things that you've thrown in here. But the net result is that not as many people are enjoying the outcome as we'd like to have. So my time's expired. Thank you, Chairman.
Thank you, Mr. Hanna. And as Mr. Kelly prepares, I make a statement very quickly here. I wasn't around when they passed this law, and it would be, I guess, fascinating to try to decide whether they really thought this would have an impact or it was just kind of dropped in there, sound good. But when 2012 we had these discussions, clearly the estimate it wasn't going to work. And here we are 4 years later, still coming to the same conclusion. And that's very disappointing. So next I recognize Mr. Kelly, and he has his questions already all answered. And I appreciate you coming here. It's been a very quick hearing discussing this. And I'm going to go and spend a couple more minutes and leave questions for the other members as well. But as we move forward, if we're really trying to incentivize and encourage small businesses, if you could devise that, maybe Mr. Rico, how would you devise that? Obviously, you want to take cap off, so it wouldn't punish or penalize those who actually are paying maybe more than their competitors. Yeah, how would you, in 1 minute, if you could just say, how would you devise this and what would change to make certain that it produces the effect, and that's to, I guess, encourage our small businesses to provide a pretty expensive benefit for their employees. Mr. Rico.
Well, like I mentioned before, I would certainly do it by NAICS code or a similar mechanism. I would also get rid of the way that it's tied to the states with the amount that you can get back, because that just adds another calculation that gets factored in for a small business to figure out how much money they're actually going to get back with a subsidy like that. You could also look at making a more uniform change that will help small businesses pay for the additional compliance and reporting costs that we have associated now that we've got to comply with these new mandates.
Okay. Ms. Wade, any thoughts on the system, the Wade system, if you put that together?
Certainly expanding the population that would be eligible for the tax credit would be immensely helpful. But still, I would say that it's a temporary approach to a larger cost issue that small business owners are facing. 30% increase on average for health insurance costs since 2008, when profits and earnings and wages have been fairly stagnant for the small business population, is still a hefty hurdle for them to get across to offer and keep offering health insurance. So while the tax credit is helpful for those that can access it, it's not a particularly helpful solution for the broader small business population in offering and affording health insurance for their employees.
Simply an additional cost of doing business, and that might provide some benefits, but at the end of the day, you still have to have enough business to cover that cost. Mr. Jackson, personal experience, and if you were looking out there and wave a magic wand, what would it look like?
Well, the increasing costs have been a major hurdle for us to continue providing our insurance, and certainly any way that we can devise a system that minimizes that cost, I'm all in favor of. I would not be opposed to, if you're going to have a cap, not make it an average cap for the employee, but make it an employee-specific cap. So I know if I have 10 employees that make $48,000, I'm going to get the credit. And if I have 10 that make 53,000, I'm not going to get the credit for them. But make it simple and straightforward, and untie it from states and all the other. If we meet the size standard and your employee makes less than whatever the magic number is for the cap, then give the people the credit for it.
Mr. McTeague, you have an interesting perspective and very insightful. I mean, 4 years ago, sitting with businesses, particularly with the chamber, and say, hey, that we knew this was not going to work. It's working even worse than we feared. How would you devise that, scrap it all together, and replace it with what?
Well, I think one area that you've heard from all the three other witnesses to look at simplifying how a small employer goes about claiming the credit. As we mentioned in our statement, you could use wage and employee account information that's already available. It might not be as precise as FTEs and average wages, but there's a trade-off between precision in targeting and the cost and complexity, the burden on small employers to comply in order to claim the credit. Obviously, you want a design that allows the most people eligible, the largest number of eligible employers to access the credit. Otherwise, it's a very inefficient way to provide this benefit.
Okay.
Mr.
Well,
Chairman, if I could add for the
yes.
record, in response to Ms. Shu's question about the 360 employers reported by TIGTA, the TIGTA account actually included partnerships and S corporations, which are basically pass-through entities, whereas the 181,000 employers that we testified to are real employers. So that accounts for the difference. Thank you.
Thank you, Mr. McTeague, Mr. Jackson, Ms. Wade, Mr. Rico. I appreciate your testimony. I wish we would have a happy story today, and that's not the case. But thank you for being here. As we know, the Small Business Health Insurance Tax Credit was created with the stated purpose of making it easier for small business owners to provide health benefits for their employees. The numbers and testimony show, however, that this credit simply did not deliver, and from what we've heard today, I believe we can see why. This credit proved to be complicated, confusing, and costly to implement. It's yet another broken promise to the small business community. The Committee on Small Business remains dedicated to the interests of small businesses and their hardworking employees. It is our duty to ensure that America's entrepreneurs, job creators, and their employees are actually being helped, not simply being paid lip service. And I ask unanimous consent that the members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. The hearing is now adjourned.